Nikhil Kumar, who's the managing director of the company. Thanks a lot, Nikhil, for joining in. The first question is related to your exposure to Europe right now. 60% of your revenue is coming from exports. How much of that is, impacted by what's taking place in Europe? Are you positively or negatively impacted? And Turkey as well, there's serious depreciation in their currency. You've limited your operations there. Are you looking to, temporarily pause your operations in Turkey?
Yeah, for the first question, actually we're seeing a positive effect of the crisis in Europe because there is an energy crisis, there's a shortage of electricity in the market, and there's a big push now towards more renewable sources. That means more towards waste to energy, garbage incineration plants, as well as wind. So investments are accelerating in this sector, and we're seeing a huge increase in the inquiry pipeline as well as orders for this year, which will be for execution next year. But nevertheless, it's a very, very positive outlook for us from the European market, and we are right in the middle of things, well positioned in this market to get a good chunk of additional business which will come from here. On the second question about Turkey, you're right. It's the Turkish economy is really in a bad shape. Inflation is at something like 60–80%. The currency depreciation is, quarter on quarter, we're seeing 15–20% depreciation of currency. Basically, there's no way that they can make investments in that country for power plants because most of the investments that took place in the past came with foreign loans, with foreign currencies, from in dollars and euros. And with the currency depreciating so rapidly, there's no way that any person who takes a loan in foreign currency can pay back. So the market has come to a complete standstill in Turkey. We are examining options of either having a very skeletal workforce over there or even temporarily closing down for some time and then waiting until things get better. It's a big market, it's a power shortage market, so eventually it will recover. But looking at the way things are right now in Turkey, I think it could even be 2–3 years.
Okay, so you said, Nikhil, if I got that correctly, you briefly said that maybe you could shut down as well operations in Turkey?
Yeah, that's the extreme situation. But this year we will still do around 25 crores in Turkey.
All right, so that's.
But we're not taking any fresh orders for next year because it doesn't make sense to just to have 2 machines or 3 machines for next year and keep the entire facility open.
Got it. Okay, all right. So we got that about Turkey as well as the exposure to Europe. You're saying, in fact, you're seeing added amount of inquiries that are coming in. Then business is looking good in Europe. So we take that point on board. Now, in terms of order inflow, there's a lot of fears about slowdown, about recessionary fears as well. Now, in the first quarter, I think your order inflow was roughly around 200 crores, I'm guessing approximately. And for the year, yes, I think you all were guiding for around 750 crores of order inflow. Is there a revision to that number? Will it be higher? Will it be lower?
No, right now I'm sticking to this forecast. We are seeing, as I said, a good situation for us in Europe, although there are recessionary trends in the market. But the energy market is in a deficit situation, in a shortage situation. So there is a huge demand for energy in general. And in India, which is, of course, our home market, there's a lot of increase in business because of the capex cycle. So in terms of positioning, I think we are well positioned in both our major markets, and we will see the positive impact of that. But I will try to give a revised guidance to order inflow when we publish H1 results, and we talk to the investors at that point of time. I hope to give a positive upgrade on the order.
So you think it could be skewed to the upside, but there's no risk on the downside to the 750 crores.
It's going to be skewed to the upside.
Got it.
All right. And if you could give us some indication of the kind of order inflows that you've seen in the second quarter so far, maybe that could give an inkling into the trajectory in which the company is going, because the first quarter that you did over 200 crores, 203 odd crores, we're closing in on the end of the second quarter as well. We do have about 25 days, but you've seen majority of the second quarter so far.
Yeah, Margalam, all I can say without giving specific numbers is that it's been extremely strong. and the momentum continues. And as I said, I hope I can give you all our investors a revised, upgraded outlook for the order inflow for this year.
Okay.
I'm very positive about the situation.
Okay, would you say the same of your revenue as well as the 900 crore top line guidance that you had given, that you will revise it upwards, perhaps with a positive bias?
I'm holding on to everything right now.
Okay.
I'm cautiously optimistic about the situation. We still have time to pick up orders this financial year and execute this financial year. So just give me, another month or so, and then we'll come up with the numbers.
All right. So, stripped of the intercompany revenue, excluding that, 900 crores is the revenue guidance that you'd given earlier. So you're sticking to that. Also, I wanted to ask you, when do you think you'll hit peak levels? I think in the past you've said that your capacity can house close to around 1,200 crores odd without too much of capex. Do you see that happening, say, by FY24, or do you see it happening in FY25? That's point number one. And also margins, you said that as well is skewed to the upside. Or utilization levels are improving. You'll get the operational leverage as well that plays out. And input costs are cooling down. So what is the margin guidance? Go ahead.
So all those factors we talked about are in play, Nigel. We are seeing some cooling off of the raw material prices, but on the other hand, there's also a depreciation of the rupee versus the dollar. So imports are definitely more expensive, especially things like copper are priced in dollars. So the depreciation of the dollar has taken off some of the benefits that we got in terms of actual price reduction of copper. But in general, our margin expansion will take place from operational leverage and not so much in terms of gross contribution expansion. So when we increase our sales without increasing our fixed costs in the same proportion, we will see margin expansion taking place.
Give us a number, Nikhil. Give us a number.
There will be some. Sorry, there will be a little bit of some movement in the gross contribution on the basis of pricing, as well as some relief taking place on the raw material side, but it's not going to be very significant.
Right. So you, in the conference call, had said 17 to 18% in terms of an EBITDA margin. You've done about 13% in the first quarter. 17 to 18% is what you're sticking by. Is that so?
No, I said 17 to 18% will be possible once we're hitting this level of 1,100 crores, 1,000.
Okay. And this year would be what?
At that level. And now I think we're going to be somewhere between 13 to 14%. 14 to 15% is possible.
And when do you hit this 1,100 crores that you're talking about? Going by the good order book that you have, things are picking up. You're seeing a big opportunity as well. FY24, do you think you'll be closer to that level?
It will be hard to do it next year. It will be hard to do it next year in 24, but I think it's definitely going to be possible in 25.
Right. Just a word on a couple of sectors. The first one was railways. You've been guiding for some increase in share of revenues coming in from the railways. Could you give us some clarity on how much does it contribute right now? What is the opportunity here? You said that maybe sometime next year is where you can get increased revenues from there. And the second one is on distillery. I mean, we're talking about higher and higher percentages of ethanol blending in fuel. How does that change things for you for the sub 10 megawatt generators?
So as far as the distilleries is concerned, there is a huge investment taking place in new distilleries, and every distillery needs a small power plant, a steam turbine generator, and a steam turbine. And we are and we have a very strong relationship with both the major steam turbine manufacturers in the country, that's Triveni and Siemens. And we hope to get a very large market share in this segment. Or we are getting a large market share, and we hope to preserve that market share. So this is going to keep expanding. At least, it's going to be seeing big business this year. We're going to see it continue into next year. There's almost unlimited demand for ethanol blending. At least for the short term, we will see this business keep expanding. Coming to railways, currently we're doing about 20% of our business with a major multinational company who is supplying the locomotives to Indian Railways. That's what we have right now. But we have supplied our motors to the Indian Railways directly. It's in for qualification, And after the qualification is done, we will see, that 1,000 crore market will open up to us.
Okay.
And I hope to get, a reasonable chunk of that market within the next 1 year.
All right, Nikhil, before we let you go, what if someone, you do business with a lot of MNCs, a lot of big corporates as well. What if someone gives you that big fat check and they say that, the generator is essential for various of their needs as well, because they buy the generator, then in fact they set things up. Will you sell out? Have you ever thought of it?
But what will I do? All I can do is in my life is produce generators, and I need to work. So this is what I'm destined to do, and I'm going to keep doing it.
But what if a good offer comes? Will you think about it?
Oh, Nigel, this is something that I can't talk on TV.
Okay.
So,
all right. Maybe we'll keep a track on that. But for the time being, going by indications, business is looking up. Thanks so much, Nikhil, for stopping by. And
thanks a lot, Nigel.
Filling us in with, what lies ahead for TD Power. Remember, the stock actually was a bit of an underperformer for a couple of years. But if you look at it in the last 3 months or so, you'll see the stock has been a big outperformer. So we said we'll invite the management and get a bit of sense of business. 25% up in the last 3 months. Slip into short break, come back, continue our focus on markets and a whole host of stocks.